refer you to our note published overnight and the trading update they released yesterday, which was clearly a lot stronger than we were anticipating in the market. So second half like-for-like sales up 17% and profit guidance around 23% above our forecast and 30% above consensus. So clearly that whole DIY, spending more time in your home and a greater willingness to spend on your home is really shining through, and there are a number of examples of that coming through in trading updates this week. I think that trend will, as I said a few days ago, continue over the balance of this calendar year, perhaps not at the extreme levels we've seen in the recent couple of months, but I certainly don't expect it to stop dead. We know that Beacon's comps in that January to March period were pretty modest, so if they've done 17% comps in the second half, to me that implies they're probably exiting all that, April to June period, their comps are probably as high as 30%. So if you're exiting a half at that rate, demand for your product would literally have to stop dead for your first half 21 comps to also not be quite generous, I think. So I'm expecting very strong profitability for this group in the first half of 21, and then obviously that second half 21 base is going to be hard to cycle for obvious reasons like JB Hi-Fi and everyone else, but we're still expecting they can generate profit growth next year. Just on the balance sheet, after an extreme trading period like that and their very well-timed sale of their DC last year, I think they'll actually emerge in a net cash position come 30 June, so very strong. And I think that combined with some of the tailwinds out there will actually see them ramp up their store rollout again, which has been more subdued recently, another driver of growth for them, which I don't think the market's kind of thinking about. So look, it's had a good run. It's not screamingly cheap here on 14.5 times, but with that strength of that balance sheet, this management team whom we know well and 50% shareholders of the business, and some of these tailwinds will stick with the positive rating. I'd also say, and Rob mentioned it, this is an extremely good read through for Adairs. We've also seen Temple & Webster come out this morning. They've reported an enormous trading update with 90% revenue growth in the second half alone. So a very good read through for Adairs that is still cheap. I think there is upside to consensus forecasts, and you've got a really good pure play mocha business in there that's not being valued anything like some of these other pure play online retailers in this space. So a good theme there that we should be jumping onto.